Hi, everybody. Welcome back to Ox Talks. It's Friday, March 1st, 2024. Hope you all had a productive day today and an end to your work week. Getting a video up late today because the office was just slammed today. I had several client meetings, took in 2 new cases today, and just a lot going on. I had to file a settlement conference brief for a settlement conference I have on Monday all day on another case. So just couldn't catch my breath all day, didn't have time to record a video, but I was watching the markets, I was watching the news and keeping track of everything as the day kind of progressed. All I can say is, wow, what a day for gold and silver. Bitcoin had its day in the light earlier this week or a couple days with its run up and some of the other cryptocurrencies. But today was gold's day. It closed up almost $40 a troy ounce, $38, I think 20 or 30 cents up. Silver also closed nicely over $23. So what was the catalyst for this? I saw one of the Fed speakers came out and made some comments that were dovish, and they were indicating maybe it's time to start cutting rates, but that would not, in my opinion, have been enough to drive the gold price up almost $40. Look, from my perspective, some of this on the metals could very well be this Bank of New York situation. That stock fell today. When I checked it almost before the close, it was down another 25%. The stock was in the $3 range, $3.50 per share, just tanking. It looks like that's going to be the next one to go. The markets are maybe, I don't mean the stock market. Stock market did great. NASDAQ made an all-time high. But in terms of the overall sentiment, it might be starting to seep into the mindset that we're about to start having more bank failures. But I'll take it, as a believer in precious metals, holding physical precious metals. It was an excellent day for the gold bugs. Thank you for watching these videos. Thank you for subscribing to my channel. I'm seeing it grow. I appreciate the comments. I appreciate everybody contributing and being here. I know you have a lot of options of other places you can go and things you're going to watch on YouTube, but let's continue growing the community. And please, if you're not subscribed, hit the subscribe button. Hit the thumbs up button to these videos. Helps to wake up the algorithms and make sure the bell notification is activated so you get notified. And most importantly, please share these videos with as many people as you possibly can, family, friends, coworkers, colleagues that want to hear what's going on, want to have their eyes open and take in some sources of information other than the mainstream media BS peddling. Interestingly enough, on the backside of gold having such a run up today, and we'll see. Oh, by the way, I wanted to, if one of you or any of you, please comment below. I tried to do some research this afternoon as to whether or not this close price today, and by Kitco was 2,083. Some places, other sources have different spot prices. I don't know how that could be possible. I go off Kitco, but anybody comment below if today was a new high, a new closing high, not intraday high for gold. I saw some mixed information on that, so I don't want to report it. If it's not I don't know if it's number one, is it the daily close high and is it the weekly close high or not? Let me know what information you see on that. We are darn near close. I know gold spiked up over $2,100 several months ago and then quickly pulled back. I think it was on a Sunday night. At any rate, things are heading in the right direction. Is this a $2,000 floor per ounce in gold? Obviously, it can always pull back, but this is happening, guys, in a high interest rate environment where gold competes for higher interest rate yielding assets, because gold is not, physical metals are not an asset that generates yield per se. So usually when rates are running up or staying up, gold gets weaker. Let me know what you guys think about this. It's a very interesting dynamic. The article I saw that I thought was at the antithesis of this, I wanted to share with you at CNBC today. An interesting article, because normally CNBC shies away from this kind of hard reality. But the title of the article posted today was "The U.S. national debt is rising by $1 trillion every 100 days." The article says the debt load of the United States is growing at a quicker clip in recent months, increasing about $1 trillion nearly every 100 days. The nation's debt permanently crossed over to $34 trillion on January 4th after briefly crossing the mark on December 29th, according to the data from the U.S. Department of the Treasury. It reached $33 trillion on September 15th of last year and $32 trillion on June 15th of 2023. Hitting this accelerated pace. Before that, the $1 trillion move higher from $31 trillion took about 8 months. So the increments are shrinking. The debt, yes, is growing, but the time it's taking to increase exponentially more by trillion-dollar clips is shrinking. That is not good news. Where does this end? Does it end? Does the government keep printing money with the printing press? At what point does this all reverse and everything seeks its level and fair market value? That will happen at some point, and you've got to pick, you better, let's say, pick the horses and bet wisely. It says U.S. debt, which is the amount of money the federal government borrows to cover operating expenses, now stands at nearly $34.4 trillion as of Wednesday. Bank of America investment strategist Michael Hartnett believes the 100-day pattern will remain intact with the move from $34 trillion to $35 trillion. It says, little wonder debt debasement trades are closing on all-time highs, such as gold. As of this article, it said $2,077 an ounce. We know it closed up a little higher than that today. Spot gold is currently hovering around $2,084 an ounce, pretty close. While recently they talk about Bitcoin. Bitcoin had a good run this week. So we have the debt levels increasing. We have interest rates staying high, which makes it harder even for the U.S. government to service the debt. They're printing money just to pay the interest on the debt. Where does this go? Everyone has to use their own judgment, seek your own financial advice. But boy, this is a period of time that I can't think of a better asset to consider, at least for a broad-based portfolio, than gold and silver. Obviously, you want to do your own homework. This is not financial advice. I'm not telling you what to buy or what not to buy. But obviously, it is something that we have to pay attention to. Will the trend continue? Will gold keep breaking out to new all-time highs? And is this the beginning, of a new multi-year bull market trend with a $2,000 floor? We will have to see. But if it has the run up like it had from 2008 onward, that was a spike from $600 or $700, I believe, to $1,900. So you do the math. That was a threefold increase, which I guess would put gold at around $6,000 if it had that same kind of a run this next time round. Anyway, I'll keep the video short today. That was all I wanted to share with you. Like I said, NASDAQ made an all-time high. The markets are still just pumping higher and higher. If you're in the markets, good for you, but be careful because it's impossible, from my perspective, to time the exit. And when it starts to reverse, and it will, everyone's going to run for the exits at the same time. So be careful. Use your wise judgment and discretion. This weekend, I talk about this on Fridays now. Weekends are a great time to assess where you're at with your financial plan, either your financial plan to keep adding to your assets or your plan to get out of debt and pay off debt and pay down credit cards, and also your preparedness plan in terms of what do you have stored up? Do you have food? Do you have water? Do you have security to protect what you have? These are the kind of things that sometimes weekends give us a chance to sit back, reflect upon, go through items, tune things up, decide what you have to add, and before you get back to the work week on Monday. So that's what I'll be doing again tomorrow. I'm taking the day off from working out tomorrow, and it's kind of like the day I've been setting up to just work on my preparedness plan, financial preparedness, and everything else we discuss on this channel. I did get a workout in this evening, and I hope all of you worked out today, got your steps in, got some cardio done. Keep moving. The physical fitness is super important. The diet has to complement what you're doing. You can't work out. I can't sit down tonight now at the table and pile down, 3 pounds of unhealthy food and feel good about working out. They have to go hand in hand. So please be judicious with your diet. Like I said, the office was really busy today, busy next week. I'll keep you posted on things as they come in. The cases I'm taking in right now, today, a business sale, a large business sale representing the owner and seller, and a partnership dispute with multi-partners in a 2 or 3 entity operation. So a couple of big matters. This stuff's accelerating. Unfortunately, when things start to get economically more difficult, these start landing on my desk. Like I think I said a couple of days ago, some of the more bustling years of my practice were leading up to and during the great financial crisis. So I'll keep you all posted. Have a great night tonight. I'll try to touch base tomorrow. Have a very productive weekend. Talk to you soon. Bye.